Hi, thank you everybody for joining me. Today, using Value Line's digital platform and investor tools, I'm going to show you how to quickly and easily find worthwhile investment candidates. Going further, I'm going to recommend one stock to buy right now. After the presentation, as mentioned, we have allotted time for questions and answers. Also, if you'd like to revisit this presentation at a later date, it will be posted on valueline.com and our YouTube channel within the next 48 hours. To start, for those joining us for the first time, I want to provide a brief overview of who we are at Value Line. We are a New York headquartered corporation that has been providing investment research for more than 85 years. Our flagship product is the Value Line Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on more than 1,700 equities that trade on the New York Stock Exchange, NASDAQ, and Toronto Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by Value Line's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. Our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, Value Line has no investment banking business with any company, including the 1,700 that are included in this service. Value Line does not execute trades for its subscribers and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. In order to provide some direction in regard to our stock search, let's start with an overview of the economic situation, as well as the Value Line Research Department's view of the stock market. The following content was prepared by Harvey Katz, Value Line's chief economist. The year 2018 is shaping up to be a strong 12 months for the nation's economy, following a succession of unimposing years since the end of the last recession. On point, the expansion, albeit ongoing on an annual basis since 2010, has been underwhelming throughout, with gross domestic product growth ranging from 1.6% to 2.6%. In fact, save for 2010, when we were coming out of the recession and there was an initial growth spurt, and 2015, when there was another brief burst, GDP has risen by less than 2.5% every year. So far in 2018, however, the signs are more positive. True, long-term growth of 4% or 5%, while touted by some, still looks unattainable. But it is reasonable to expect quarterly gains of 3% or more for the rest of this year and into 2019 before growth decelerates. For now, a more business-friendly tax structure, fewer regulations, and the lowest jobless rate in decades should provide the backdrop for the healthy gains in fixed investment and personal consumption expenditures needed to keep the economy moving forward. As for the stock market, the Charles Dickens 1859 classic, A Tale of Two Cities, fittingly starts out, "It was the best of times, it was the worst of times." That famous quote could well sum up the U.S. stock market over the past decade. Only in this case, the worst of times preceded the best of times. On point, the Dow Jones Industrial Average tumbled from a then record of more than 14,000 in 2007 to just over 6,000 in early 2009, before reversing course and going on a merry jaunt past 26,000 earlier in 2018. Now we seem to be at a crossroads, with the bull market looking old, but refusing to fade away. Of course, there is no expiration date on a bull or bear market for that matter. So the good times could roll on for a while, especially if the economic and earnings fundamentals stay positive. Still, inflation, the historical rally killer, is on the prowl, and the Federal Reserve, in response, is continuing to raise interest rates. Thus, as many as 3 more rate hikes are possible this year, with 3 additional adjustments perhaps on tap in 2019. Should the Fed sense a need to assume a more aggressive rate stance, the business expansion, as well as the bull market, could be at risk. In sum, as we look out over the rest of 2018, we have several pluses and minuses to consider. To wit, stocks are likely to be further supported by the growing economy, lower taxes, fewer regulations, and positive earnings comparisons on an aggregate basis. Conversely, the stock market may continue to face periodic headwinds relating to geopolitics, trade, inflation, the Federal Reserve, and rising bond yields. Such cross-currents suggest a choppy, range-bound stock market in the months to come, which is consistent with our neutral position on equities at this time. Now that we have a firm base in regard to the economy, stock market, and our outlook, it is time to start the process of finding a stock to buy right now. For our search, I'm going to use several details of Mr. Katz's view. First, I'm going to focus on stocks that have a history of earnings gains, which are also expected to persist. The research department creates detailed estimates and projections for just such a purpose. These companies should continue to benefit from the growing economy. In addition, due to all the uncertainty, I will attempt to target companies that are relatively safe but stand a good chance to beat the broader market. Focusing on risk will also help in the event of a market downturn. These equities would be expected to fall less. I will go into far greater detail when we make our way to the screener, but for now, please note that we are currently on our homepage, valueline.com. On this page, free of charge, you can access daily market commentaries, as well as general interest articles that are written by our analysts. Examples of such content are analysis of economic releases and quarterly earnings supplementary reports on the 30 components of the Dow Jones Industrial Average. Excuse me. I'm now going to sign in with my username and password. After entering my credentials, I'm taken to the welcome screen. From here, I can quickly get to many important areas of our site, including Browse Research, which is the main home for our core equities products. I can also head to our investor tools, as well as the home pages for our monthly stock selection services. That said, for this presentation, I want to start at the dashboard, which is the main landing page for subscribers. Before we start our search, it's important that we view some statistics that display how the Value Line universe of 1,700 stocks is being valued in the current market. These stats are published every week in the Summary Index, which can be accessed via the quick links. As you can see on the box on the left in the middle of the page, the median stock in our universe is trading at 18.1 times our 12-month share earnings estimate to December 2018. This is a good time to mention that Value Line's estimates are created completely in-house by our research team. Our PE calculation is also different than many other research houses. More specifically, we use a combination of reported figures and estimates for our P ratios, which we think is better than using a trailing figure or just estimates. For those of you that participated in one of my previous webinars, you may have noticed that the 18.1 is below recent levels. True, the recent market correction has something to do with that, but I also want to mention the impact of the Tax Cuts and Jobs Act. Since that legislation passed in December 2017, we have adjusted our financial models for the stocks that we track. Many companies in our universe were previously paying upwards of 35% in corporate taxes, but will now pay closer to the headline 21% figure. Needless to say, this will continue to be a boon to profitability, and thus our PE multiple has come down. As for the 18.1, specifically, it is still somewhat elevated on a historical basis, but is consistent with levels reached during other multi-year bull markets. Let's also take note of the median dividend yield, which is just 2%. In addition, Value Line's 3 to 5 year median price appreciation potential is 45%. We've been calculating this latter value, which is commonly referred to as the VL map, for decades, and recently it was at its lowest level ever reached, at 20%. Again, like the PE, the market correction was involved. In addition, we are now factoring in lower taxes, which will help view profitability out 3 to 5 years. Just as important, we are now projecting results to the 2021-2023 timeframe. The VL map has proven to be a worthwhile indicator for evaluating the broader market, and a number of published works have focused on this proprietary metric. All told, and this probably won't shock many of you, but according to these proprietary metrics, we feel that the market is not exactly right to take off from here. This also jives well with Harvey Katz's conclusion and neutral position on equities at this time. That said, using Value Line's investor tools, hopefully we can find some stocks with worthwhile investment attributes. Let's now go to the screener and find some candidates. This important tool, as you saw earlier, can be accessed via the Welcome screen, as well as the Find Ideas tab at the top of our website. Subscribers have access to more than a dozen preset screens, as well as almost 50 fields. I should also note that the screener possesses more than 200 fields in total, but those are only available with higher level subscriptions. I'm now going to run a screen with the information we have discussed. The goal will be to find stocks that have a history of earnings gains, are expected to continue to post higher profits, are relatively safe, and are expected to outperform the broader market. Let's start with the earnings side of the equation. Under the growth rate section, I click on EPS growth 5 years. Entering the criteria can be completed in a couple of ways. I can use the sliding bar, or simply type the values in the from and to boxes. For this exercise, I'm going to set the lower bound to 12%, which is a healthy rate. I want to weed out slow or moderately growing companies. Historical growth is, of course, helpful, but I want to include a forward-looking field. For all 1,700 stocks in the Value Line Investment Survey universe, we create 3 to 5 year financial projections. I want to highlight that Value Line is one of the very few research houses that provide financial projections that far out. We think that these estimates are of great value to our subscribers since they show a long-term trajectory of the company. So let's include projected 3 to 5 year EPS growth rate into our screen, and again, we'll set the lower bound to 12%. Just taking a second to load. Hold on one sec. I'm going to reload that. Sometimes it gets the jitters. All right. I now want to add the risk component. Due to the global uncertainty that we have already discussed, I want to get rid of lower quality stocks and make sure that the selections provide some defensive properties. There are numerous risk and volatility measures, but we recommend Value Line's proprietary safety ranks. The safety ranks measure the total risk of a stock and is arranged on an easy-to-understand 1 to 5 scale, with 1 being the most stable issues. I want to highlight the fact that stocks ranked favorably for safety have, in the past, held up far better than the broader market during corrections and downturns. For this, let's focus on stocks that have above-average safety ranks. So 1 and 2 are above average. These are the most financially strong companies, and using this field will almost certainly remove smaller market capitalization companies, which often experience significant price swings in a volatile market. Okay, down to 25 stocks. That is obviously still a few too many, but a brief scan provides a solid list of industry leaders. We now need to add one final field that is perhaps the most important. This list is full of quality household names, but how many stand a good chance to beat the overall market? My last field will focus on potential stock price appreciation. Of course, adding in all the earnings growth and safety fields are great, but in the end, we just want the stock price to go up. I already mentioned that Value Line's analysts create 3 to 5 year financial projections. Using these values, we then create a target price range for each equity. For the final field, I want to tap into this and include a projected 3 to 5 year annual total return percentage, and I'm going to focus on the low end of the range to be conservative. I'm going to use 10% as my starting point, which is above the historical annual rate of return for the major stock market indexes going back decades. FYI, it's about 8%. For this, I have to type in 0.10 into the front box, or 10%. Okay, 6 results. According to our criteria, these stocks have a history of earnings gains, which ought to persist, are relatively safe, and are expected to outperform the typical market return over the years ahead. All 6 may well make good additions to your portfolio, depending on your strategy, but after evaluating each before this presentation, I'm going to recommend Cracker Barrel Old Country Store, ticker CBRL. Before I go any further, I want to point out that screens can be saved and revisited later by utilizing the button at the top. Let's now get some more information in regard to Cracker Barrel. Clicking on the company name will take us to the digital report, where the data, information, and analysis is arranged in more than 15 modules or boxes. These modules can be moved around, resized, or hidden, so you can create your own customized stock report. For instance, since we spoke about it multiple times already, perhaps the 3 to 5 year projections are most important to me. I can literally move these so they're the first thing that I see. I can also expand the size to provide more information. For instance, we talked about safety, so maybe we don't want financial strength, so we can just hide that module and expand the commentary. Once I get the page set up to my liking, go over to the horizontal sliding bar and save your changes. The next time you view this page, it will look the way you set it up. To start, let's get some quick information about Cracker Barrel, which is available via the business description box. The Tennessee headquartered corporation owns and operates about 650 restaurants and gift shops in 45 states. It has 73,000 employees and little insider ownership. From the valuation module, I can quickly pull up a stock chart. And we can also, let's see how CBRL has performed of late. The yellow line is the equity's performance, and as you can see, it has been steadily increasing in value, but has leveled off of late. I'm now going to take a quick look at the analyst commentary to get some information in regard to what is going on at the company. Cracker Barrel Old Country Store continues to navigate a tough environment. Operating conditions remain challenging across the casual dining space, with food inflation on the rise and many of the company's competitors looking to lure customers with aggressive discounting. However, we think that double-digit annual earnings growth for the company is realistic. Despite the industry pressures, core restaurant same-store sales, up a decent 1.1% during the second quarter of fiscal 2018, should continue to track in the low single digits, buoyed by stepped-up TV and digital advertising, more seasonal menu items, and an expansion of the new coffee program. Modest price increases should also help, without hurting the concept's attractive price-value proposition. And COPS also ought to benefit from a heightened emphasis on off-premise dining, meaning takeout. I now want to show you our classic PDF report, which is included with a digital description, and provide some additional analysis on why we think CBRL is a good choice. These reports can be accessed from the PDF link here at the top. First, viewing the statistical array, which is the main numbers-focused area of the report, you'll see that the company's sales, earnings, cash flow, dividends, margins, and shareholder returns are all trending in the right direction. Also on the top left, in the projections box, we can see that Value Line expects CBRL to trade between $215 and $295 during the 2021-2023 timeframe. The current quotation of around $160 leaves a lot of room for potential appreciation. On that note, lastly, in our investment advice, the analyst mentions that at the recent quotation, we like this good quality restaurant issue for buy and hold investors. The mid-cap stock also offers a solid dividend yield of over 3%. I hope you found Value Line's screener and process of finding worthwhile stocks easy and informative. I also encourage our subscribers to utilize the Watchlist and Alerts tools. The Watchlist allows you to create a list of stocks that you own or are monitoring and view them side by side. As for alerts, you can set up notifications and receive an email or text message when a specific event occurs. These include when we put out a new report, when we change a rank, or when a particular stock increases or decreases in value by a percentage of your choosing. In all, more than 15 alerts are available. These tools can also be accessed via Find Ideas. Lastly, I know that this procedure does take time. That is why I want to close with introducing you to Value Line's model portfolios that can help you alleviate the work of finding worthwhile investment candidates altogether. Part of the Value Line Investment Survey is the weekly Selection and Opinion newsletter. Along with economic and stock market commentary, are 4 model portfolios. Each one has a different investment strategy, is actively managed, updated each week, and contains 20 stocks. These portfolios are overseen by senior analysts. Here's the recent developments, and then each portfolio. Portfolio 1 is best suited for aggressive investors and focuses on stocks that are expected to outperform the broader market over the year ahead. Portfolio 2 should be of interest to more conservative investors and focuses on dividend-paying stocks that also offer worthwhile appreciation potential. Portfolio 3 chooses equities with long-term price growth potential and, of course, is best suited for patient investors. Portfolio 4 is filled with stocks that possess above-average dividend yields and is for investors seeking current income. We have a great number of subscribers that follow these portfolios. Subscribers looking for a total investing solution are also encouraged to check out our premium monthly selection services, Value Line Select, Dividend Income and Growth, Special Situations, and Select ETFs. These products all provide monthly picks, updates to previous selections, as well as sell recommendations and notifications via email or phone. If this is something that sounds up your alley, call 1-800-VALUE-LINE for a free sample report and trial subscription. This marks the end of the formal presentation, and I will now tackle your questions. All right, first question is, how often are our estimates and PEs updated? Well, we put out the full-page PDF reports every quarter, but the PEs and other values are updated each week in the summary and index. All right. Here's a question about Cracker Barrel, and that the timeliness rank is only 3, which is a hold. We refer to 3, meaning that it's just an average performer, that we think it will mirror the return of the broader market. Timeless ranks are, of course, important, but it is just one variable that I used in my search, and as you can see, I didn't use it as a criteria in the screener. So we recommend that you look at the timeless rank, but not only look at the timeless rank. Just like any other variable, you would want to focus on more than one thing. All right, if you wanted to duplicate one of the model portfolios, would you suggest buying all the stocks at the same time or to take another approach? All right, there's actually two ways you can do it. You can, on day one, buy all 20 equities held in a particular portfolio and then make the corresponding trades thereafter. Or I know of some subscribers who just start on day one, buy a couple of the stocks, and then make all the trades going forward. So eventually you'll have the 20 stocks. It really depends on your preference, how many trades you want to complete at once, what your costs are, how much money you invest, etc. In regard to that, I should mention that Portfolio One's turnover is fairly significant. The whole portfolio probably turns over every 6 months, while the other three portfolios maybe turn over 50% a year. So that is something to keep in mind if you want to mirror one of those strategies. In your analysis, do you consider the current PE ratio in relation to past historical PE ratios? Yes, of course. At the beginning of the presentation, I mentioned in the sovereign index the current PE of our universe, and I mentioned that it's lower than it has been previously. You can also see, for instance, 26 weeks ago, it was closer to 20. At the market high at the end of January, it was 21.1. So it's definitely a good variable to look at. You don't want to buy a stock that's necessarily trading at an all-time high PE unless it has a lot of other positive factors. Okay, so going back to the timeliness rank with Cracker Barrel, Portfolio One can only hold stocks ranked 1 or 2 for timeliness, regardless of any other variable or event. So Cracker Barrel was recently removed, but that doesn't mean we don't like the merits of the stock for the long term. All right, a few more questions. Hold on one second. Is there a reason why value line figures do not have 1,000 separators? On our reports, the whole numbers are in millions. And does the cash flow line include the current year's CapEx spending? Yes. As you can see, the cash flow line is the solid line here, and the dashes are our estimates for the current year and following year. All right. In regards to book value, our book value numbers include intangibles. Can you access prior value line issues going back longer than a year or two? Yes, in a couple of ways. First off, higher level professional subscriptions get 5 years of reports. In addition, we have a product, which I can actually just quickly show. This account currently, I don't have it, but the historical archive, which will give you every PDF stock report going back to 1998. So if that's something that interests you, I recommend calling 1-800-VALUE line, and they can help you out with that. Can you please show again the screen you created? Okay, I didn't save it, but I should be able to pull it up pretty quick. Also, remember, as I mentioned earlier, this presentation will be available on our site and YouTube within the next 48 hours, so you can always come visit it, but it's not going anywhere. Oh, an extra stock jumped in there. All right. Oh, there is a question about why not Starbucks for Cracker Barrel. Starbucks is another stock I personally recommend, and Value Line is pretty bullish on it as well. Can one set up their own portfolios or watch list? Yes. Guess we can just create a watch list real quick. But I guess some of them, here's one that I already had created. So we can add. You have to add one stock at a time, so we'll add Starbucks too. And so on. As you can see, watch list, the max is 15 holdings per watch list. Please explain the relative PE on the stock report. Okay. So here's the report. As you can see, the relative PE is 0.88. That means that Cracker Barrel is trading at a discount to the 1,700 stocks that we cover. It's trading at 88% of the broader market's PE. And if you look in the relative PE row on our reports, as you can see, it consistently trades at a discount. All right, I believe that's all the questions. I'm going to do a quick scan to make sure I didn't miss anything. No, that is all. Thank you so much for joining me today. Take care, and like I said, this will be posted within 48 hours. Take care.